We're back with Jeff White for part two of our interview, and we're talking with him about some of the technical analysis tools and the ways he looks at charts to find good opportunities each day. Yesterday in part one, we talked about the fact that he's looking for several patterns that he's flipping through charts the night before to whittle them down to kind of a basket of stocks that he's going to watch for that day. So, Jeff, thanks for joining me on the phone again today.
Hi, Tim. Thank you.
So let's talk then more about how you whittle these choices down you have each night. Obviously, you've got a huge market of choices to choose from if you're looking even just at stocks. So talk a little bit more about how you whittle it down to something manageable that you're going to watch that day.
Okay. Well, yesterday we kind of talked about this a little bit, and I referred to my preference for a clean chart pattern. So beyond that, what I'm really going to do is weigh the expected risk and reward of that potential trade. And by that, what I'm looking at is how far do I expect this pattern to project price to if it is confirmed. So if price does actually make a move out of this pattern and begin to confirm that pattern, how far do I expect it to carry? That's going to be based on the market conditions. It's going to be based on the pattern itself, and it's going to be based on the chart of that particular stock. If there's plenty of room to run, then I'm going to just really probably take it, for example, we're talking about that bull flag pattern. I can take a measured move and add that onto the breakout area, and that's going to be my expected profit. If the trade fails, meaning price is going to move back down beneath the consolidation area of that flag pattern, then I know that that's my expected risk in the trade. So I've got an expected reward and risk, and I'm really going to weigh that for any trade candidate that I'm eyeing for the following day. And then that's really going to help me narrow down my list. I might find some trades that are kind of a 1-to-1 risk to reward ratio. Maybe, for example, I'm looking at the chart and I'm seeing a very clean, nice bull flag pattern that ordinarily I would take, but maybe a short distance above that, there are some major key resistance that stock is going to be facing. So my true reward in that stock may be very limited due to the fact that there's another level of resistance that stock would have to clear. So in that case, I'm looking at a risk-reward that's probably more of a 1-to-1. And that's the type of trade that I'm going to ignore. I'm going to move on past that. I'm going to look for something that's going to give me some multiple profit projection or expectation versus what I would expect to lose if the trade fails. And I think it's very imperative that every trader review their setups and their plays and consider what you can lose in a trade. That's something that a lot of newer traders and even some experienced traders fail to recognize, and before they know it, they're deep, in the red on a trade, simply because they didn't count the cost before they entered that trade. And so I know that I'm going to be wrong plenty, and that's okay with me because really my personal trading style is one that's based on having a number of at-bats. I feel like over time, and I know that over time, I'm going to have plenty of good-sized winning trades. And so if I can manage my risk on the trades when I am wrong, it's going to allow me to be net profitable, and that's really what I'm aiming for.
Yeah, I like that you bring up the batting average because it's good to remind us all that Hall of Fame batters in the major leagues fail 65% of the time, and I think that it's interesting to relate that to trading as well. One of the things you talk about, let's go back to that bear flag pattern for just a second. Obviously, it's an uptrend, and it consolidates for a few days, and then it starts to resume its trend back up again. How much do you want to see that bar or in a daily chart kind of start to resume the trend before you say, okay, it's ready. I'm ready to get in? What confirmation are you looking for?
I'm looking for very minimal confirmation. I basically, as soon as price is able to clear that trend line or that resistance level, I'm looking to enter a trade. And so for example, for a $20 stock, let's say that $20, that the whole number at 20 is the key level, I might place my order for a buy entry at 20.05. So I'm just basically looking for a very small move through that level and make sure that it's cleared, and then I'm looking to enter a trade because that's my indication that price is now back on the move, that it has punched through that ceiling and is now ready to resume its upward move.
Are you always placing a stop loss below if you're wrong and a profit target above the moment you're into a trade?
I'm always placing a stop loss below if I'm wrong. Now, on the profit target, it really is going to depend on the trade time frame that I'm taking this play for. If we're talking about a swing trade, what I really like to do is use bracket orders. And so, yes, I do have both my entry, all of my entry, my stop, and my profit target all lumped into one big order as a bracket order. So for a swing trade, for any multi-day move that I'm looking to capture, that's what I'm going to do, and I kind of utilize a set it and forget it type of approach with those. If it's an intraday play, so I'm day trading this stock, then it's really going to be based on momentum in the stock. So I'm going to enter the trade. I'm going to immediately place my stop loss in case something goes haywire and I need to exit that position. It really reduces the emotional toll of having to reach up and actually exit that position if I know that this stock is now turned around. So I like having a resting stop loss in place if I'm wrong. But in terms of a day trade for profit taking, I'm really going to try to ride that trade and see how far that momentum can carry. If I get a very, very sharp move right after my entry, then I'm going to be taking some of my position off rather quickly. The sharper the moves intraday, the more prone they tend to be to reversal. And so if I start to get a gradual move through that level, then I can stay with it a little bit longer and maybe get a little bit, almost like a 45-degree angle type of move on the intraday chart. That's going to be a much more sustainable pace of advance, and that type of move will allow me to stay with that trade much longer and look to hopefully get a little bit more out of the trade. So that's really what I'm trying to do. So on the intraday trades, I don't necessarily have a resting limit order to take profits. I'm really going to be gauging the momentum of the stock and managing my exits manually that way on the profit side.
All right, so that would be the bull flag. I'm assuming you have maybe a handful of patterns that you're always looking for that are your favorites. Can you mention a few of the others?
Yes. I really like looking for channel patterns or, kind of a rectangle type pattern which follows a trend. So, for example, if price has been declining for a few weeks and then it settles into a very low-level trading range, then I'm going to be watching that very closely. If price is able to start leaning on that lower support level, then I'm going to be looking to initiate a short sale out of that pattern. Vice versa on the long side. So if I see an uptrend followed by a pretty tight, well-defined trading range, and I'm seeing a high rectangle or high base, then I'm looking to buy a breakout for that. I also trade a lot of wedge and triangle patterns. So, for example, one trade that I took just recently that worked out well was kind of a rising wedge type of pattern. And this is a stock that had failed to break out. It then sold off pretty sharply. And the rally off that sell-off was very weak, and it came on light volume and really kind of began to stall out. And so what happened was it looked like a great spot for initiating a short sale out of that wedge pattern. And so I initiated the trade, and then that one actually worked. So, they will sometimes fail, of course, and I know that as a trader, and so it's necessary for me to always have a stop in place. But I'm looking for flag patterns. I'm looking for pennant patterns, which is like a flag, only the consolidation is narrowing rather than outlined by two parallel trend lines. I'm also looking for triangle patterns, so symmetrical triangle patterns, ascending and descending triangle patterns. Those also are very helpful for me to recognize key levels where price is beginning to get kind of squeezed between two prices, and if it can move through the right side of that pattern, then I'm looking to initiate a trade there.
Jeff, I'm glad you talked about the good trade. I always have to ask, talk about maybe a trade that didn't work out and what you maybe learned.
Okay. I was looking at a trade actually yesterday that I was waiting for a breakdown in this particular stock. It was leaning on a support level, and it tried to break through that, so I initiated a short sale, and then price quickly ran back up and stopped me out. So, that does happen, but my trading style is to keep my stops very tight. And I do know that around key levels in stocks, whether they're support or resistance, a lot of traders are monitoring the price action. There's a big game that can take place. So sometimes you'll see kind of head fake moves, and I do occasionally get head faked, and that's simply part of trading. But that happened to me yesterday. It was a little bit frustrating, but the damage was actually pretty minimal.
All right, good. I appreciate you sharing that with us. I always like the honesty of the good and bad trades. That's why I ask both. Tomorrow we're going to talk with Jeff about how he became kind of confident as a trader and got to that point where he knew he could make a living doing this, and then maybe what's missing out there for a lot of traders and why they can't achieve that same level. So we'll talk to Jeff again tomorrow. We'll see you then.